Hello and welcome to the weekly market metrics. I'm your host Sandeep Rao. So we are in the week 39 of the year, which means we have just about 13 weeks left in 2025. Time really is flying. Before we dive into the numbers, here's a bit of housekeeping. Starting this week, we are changing a few things with the release schedule. You'll now get 3 episodes every week. On Tuesday, we kick off with the long and the short show. On Thursdays, there is a midweek episode. And on Saturdays, we wrap things up right here with the weekly market metrics. We're experimenting with structure and cadence, so you can expect some refinements as we go along. Alright, with that out of the way, let's jump into this week's market metrics. What a week this one has been. We see a sea of red across all benchmark indices and really no place to hide unless of course you have all your money in gold or silver. On the news front, first came the H-1B visa news, which sent the IT stocks tumbling, and then when it looked like as if things might settle, DJT dropped another bomb. 100% tariff on branded and patented pharmaceutical products that hit pharma stocks hard on Friday, adding to the week's pain. DJT just doesn't seem to be slowing down. Every headline from him feels like it's moving the market in one way or the other. So yeah, not the easiest of week for investors or traders, but definitely plenty for us to talk about. Let's start with looking at some charts. Talking about Nifty, it's been all red candles since last Friday. The index is down about 672 points or 2.65% for the week. On a weekly time frame, after 3 straight positive weeks, we've now closed this one in red. And here's the kicker. The down move this week wiped out all the gains of the last 2 weeks. As the saying goes, we climb up the stairs but come down the elevator. That's exactly what has happened this week. Until last week, everything looked constructive and the expectation was that the uptrend would continue. But alas, this remains a news-driven market and nothing seems to be sticking. We had spoken earlier about 25,250 as the key support for Nifty, and that level has been broken. The next area to watch is 24,400 to 24,350 zone. Honestly, there's no point talking about resistance in this kind of a market until we actually see some kind of a meaningful upside happening. Turning to Bank Nifty, the picture isn't much brighter there too. We've had 4 red candles and just 1 green on the daily chart. Since last Friday, the index is down about 1,070 points, that's roughly 1.93%. The key 55,000 support level has been breached, and now the next support is around 53,600 and 53,500, that range. On the weekly time frame, the story looks pretty similar to Nifty. After 3-week stretch of strength, this week's move has clearly shifted the tone. The Midcap Select Index had an even rougher ride this week, down about 677 points or 5.11%. It's a similar story here. The selling pressure has been relentless. The next support area to watch is between 12,500 to 12,450. And finally, the Sensex wasn't spared either, losing nearly 2,200 points or 3.12% for the week. The next important support sits at around 79,800, and that's the level I will be keeping a close eye on. Now let's talk about the sectors and what really dragged the markets down this week. Nifty IT was the biggest casualty, down almost 7.86% since last Friday, thanks largely to the H-1B visa shock. Realty followed close behind, slipping close to 6.1% as the sentiment just couldn't hold in a risk-off environment. And then Pharma also down 5.2%, reacting sharply to DJT's announcement of those 100% tariffs on branded and patented drugs. So across the board, it was these 3 sectors, IT, Realty and Pharma, that did most of the damage and pulled the indices down. Now let's take a quick look at the ROC table. Now here's how the year-to-date picture looks like. Nifty 50 is still holding on to the 4.27% YTD gains, not bad given the volatility. Bank Nifty is a relative outperformer here with 6.94% YTD. Sensex is more muted but still up at around 2.93%. And then there's the Midcap. The steep fall this week has pushed it to a negative 2.66% YTD, a complete reversal from being the leader earlier this year. So the message is clear. Large caps are still in positive territory, but the broader markets, especially mid-caps, have rolled over into the red. Talking about the sector-wise markets for the week, this was really a week to look for sectors that managed to hold up rather than perform, because most of the market was under pressure. And here are the ones that stood out. Nifty Metal topped the list. It was down 1.02%, which in this kind of a market almost feels like an outperformance. Next was Nifty CPSE slipping 1.26%. Commodities were down 1.75%, and PSU banks also managed to hold relatively better, though they did close lower by about 1.84%. Lastly, Nifty Bank rounded off the list with 1.93% decline. So while everything was under selling pressure, these pockets, metal, CPSE and commodities, were the ones that showed some resilience. It's also worth noting from last week's trends that the PSU bank continued to hold on to the ground in the rankings, even though they ended up negative this time. Now let's look at the commodities. This is where most of the action is. We will focus on 4 key and the most liquid commodities. Let's start with gold. Look at the month-on-month ROC table for gold. All months this year have been in green. This year, gold is up about 41.88%. For the month, it's 9% up, and for the week, it's 2.83% up. It also made a new all-time high this week, and on a shorter time frame, it's kind of consolidating. Moving to silver, it was 5.8% up this week and close to 13% for the month. Silver continues to be in an uptrend, but if you look at silver on a year-on-year basis, this year definitely is an anomaly of sorts with around 48% in positive. Now let's look at natural gas. On a shorter time frame, it's flattish, and for the week it has been up 2%, and for the month it has been down minus 1.58%. For us in India, natural gas is generally a downtrending product, as is evident from the chart. Lastly, among the commodities, let's look at crude oil. On a shorter time frame, crude seems to be trending up a bit, and as for the week, it's been up 4.29%. For the month, it has been up 2.38%. Moving to overnight versus intraday structure on the indexes, this week obviously was red both overnight and intraday. But majority of the fall happened during the day, so if you look at Nifty 50, close to minus 1.74% happened intraday, while minus 0.59% happened through the gaps. It's also worthwhile to look at the YTD values here. The classic overnight drift is back and visible. We are up plus 7.26% for the year as far as overnight gaps are concerned, and on an intraday basis we are down minus 1.47%. Now let's talk about options, expiries and volatility this week. Nifty's weekly expiry this week on Tuesday was extremely volatile. After opening, it went down 0.3%, then went up 0.7%, and then came down again by 0.4% to close at around 25,184, down 0.13% from the previous day's close. It was crazy. On top of it, there was hardly any premium compared to the actual move. It had a range of 177 points for an 85 rupees straddle premium at open. Tough for both directional and non-directional players. Sensex had its monthly expiry on Thursday. It made a range of 748 points and had a straddle premium of close to 284 points at the open, but it was relatively easy for the directional sellers as the market continued to go down throughout the day, closing at minus 68% or 556 points lower than the previous day's close. Talking about VIX, the volatility index, INDIAVIX moved up 14.6% this week to 11.43 from a low of 9.97 last week. If you look at the ranges, there has been a significant expansion this week. This week, the average 5-day range is at 187 for Nifty, and last week it was at 123. This expansion can be seen across all indices. On a directional basis, so far all indexes are below their 21 and 50 period moving averages, which means a negative bias on both short-term and medium-term basis. In summary, as the numbers and the charts clearly show, this was a tough week across the board. Pretty much everything was in red, except for metals like gold and silver, which managed to shine amid the chaos. On a lighter note, this Friday noon, a friend sent me a forward about an active volcano erupting somewhere in Andamans. Given the state of my mind, I replied, yes, I can see it on my charts. Now, I'm not sure if he understood what I meant, but I'm sure many of you do. Talking about the outlook for the coming week, it's going to be a short week with October 2 off for Gandhi Jayanti and Dasara as well. Yes, we lost a trading holiday there. I'm not sure if that's something to be happy or sad about. Two key things to keep on your radar. October 1st, Wednesday, the RBI announces its interest rate decision, which could bring a short bust of volatility. Second, on October 3rd, Friday, it's the quarterly settlement day. So if you are an active trader, make sure your cash management is in order. Now, on a side note, I'm reminded of this old market quirk called Friday down, Monday down effect. The idea is simple. If the market closes in red on Friday, the odds of it gapping down on Monday go up. Now, let's see if that plays out this time. Coming to the short-term trend-following strategies I track, Nifty was long for 11 straight days and then exited on Monday, chopped around on Tuesday and went short on Wednesday. It's still short as of now. Bank Nifty, on the other hand, stayed long for 13 days, moved sideways for 2 days, and went short on Thursday. Broadly speaking, after a week of relentless selling, I wouldn't be surprised if we get some sort of consolidation or even a small uptick in the coming days. But of course, this is a news-driven market and your guess is as good as mine. Till then, trade safe and I'll see you next week.